One storm, one thief, one spark, and your project stalls. Let's fix that with a simple Kentucky Builder's Risk Plan. I'm Adam Sheridan with Reed Brothers Insurance, and I work with Kentucky contractors every day. Today I'll explain who should buy builder's risk, what it actually covers, and how to line it up with your contract so that you can build without delays. Most stalls happen when the contract says one thing, the policy says another, and the certificate shows neither. Materials get damaged or stolen, and then everybody argues whose policy is going to pay for it. Okay, first, what is it? Builder's risk is temporary property insurance for the project while it's under construction or renovation. It covers the job itself, materials, supplies, and certain temporary structures. Who should buy it? Owner purchase works great when there's a lender and big project values. GC purchase is clean when you want control over endorsements and then certificates. Trade-only installs can use an installation floater, but match it to the contract so that there's no gap. Okay, but what's actually covered, right? Think materials on site, some off-site storage, and then some in transit when it's scheduled. Some common covered causes: fire, wind, theft, vandalism. It's going to be policy dependent. Things like faulty workmanship, flood, or earthquake are often needed endorsements. An important endorsement to consider: a loss that can push your schedule back. Add soft cost and delay coverage to help with loan interest, architect and engineering fees, permits, and similar expenses after a covered loss. You may want to consider flood or earthquake where it makes sense. And then add testing for mechanical, electrical, and plumbing systems, higher limits for transit and off-site storage, and debris removal. If the owner wants early occupancy of one area, you need to add coverage for permission to occupy. This is not automatic. Lastly, how is your contract set up? Decide who buys the policy. Is it you as the builder? Do you want the project owner to buy it? Set the limit to the project value plus change orders, and then list who's named insured, additional insured, and loss payee or mortgagee if there is one. But spell out who pays the deductible in the event of a claim. So, claim example, there's a new commercial building in Lexington. The owner bought the builder's risk to satisfy the lender's requirements, added the GC and as additional insured, bumped transit and off-site limits for prefab panels, and included soft cost. A wind event came through, damaged stage materials, and the claim paid smoothly because the roles, the limits, and the loss payees were set correctly on day one. And not every builder's risk policy is the same. Some won't cover you, the builder, or it's going to severely limit the coverage. It's why I prefer when the builder buys the policy that way it gets set up right and then bills the customer. But again, it's all about your contract, and I get it. On new builds, you want to save money anywhere you can. So keep the premium lean by right-sizing limits, setting reasonable deductibles, and then matching endorsements to the actual exposures. Also, secure the site. Proper lighting, fencing, storage, security cameras, and delivery controls. So here's your builder's risk checklist. Decide who buys it, set the right limit, add soft cost, fine-tune endorsements, align the certificates, and start the job clean. If you're ready to dial in your next project, let us build your policy. You can get started at the link below. Call us 606-679-6311 or shoot me an email. Again, I'm Adam Sheridan with Reed Brothers Insurance. Thanks for watching, and if you found this video helpful, hit like, subscribe, or share it with a fellow builder who's trying to make sense of their insurance program. And we look forward to working with you.